Let's talk about your hard-earned cash. You work too damn hard to let it sit around losing value. That's why choosing where to park your money in 2025 is more important than ever. We're talking about beating inflation and making your savings work for you. This isn't about getting rich quick. This is about smart, foundational financial moves. It's about understanding the tools at your disposal. Today we're diving deep into two popular options: high-yield savings accounts and money market accounts. By the end of this essay, you'll know exactly which account type aligns with your financial goals. No more confusion, no more second-guessing. Just clear, actionable information to help you boss your finances. Ready to dive in? Let's go. High-yield savings accounts. They sound fancy, right? Here's the deal. These accounts are offered by online banks and they want your money. To get it, they often offer juicier interest rates compared to traditional brick-and-mortar banks. We're talking about rates that are often significantly higher than the national average. In 2025, you might see rates on high-yield savings accounts hovering around 4% or even higher. Not bad, right? But remember, interest rates are constantly in flux. What's hot today might be lukewarm tomorrow. It's crucial to stay informed and compare rates from different institutions regularly. Don't settle for mediocre returns. Your money deserves better. Now let's talk money market accounts. These financial tools are often overlooked but can be incredibly powerful for growing your savings. These bad boys are also designed to help your savings grow. Unlike regular savings accounts, money market accounts often come with higher interest rates, which means your money works harder for you. They typically offer competitive interest rates that are often on par with or even slightly higher than high-yield savings accounts. This makes them an attractive option for those looking to maximize their earnings without taking on too much risk. Think of money market accounts as a hybrid between a savings account and a checking account. They offer the best of both worlds, combining the higher interest rates of a savings account with the flexibility of a checking account. They often come with check writing privileges and debit cards. This means you can easily access your funds when you need them, whether it's for paying bills or making everyday purchases. This can be super convenient for managing your day-to-day finances. Imagine having the ability to earn more on your savings, while still having the flexibility to use your money as you see fit. However, there's a catch. There's always a catch. While money market accounts offer many benefits, they also come with certain requirements and limitations. Money market accounts typically have higher minimum balance requirements compared to high-yield savings accounts. This means you'll need to maintain a certain amount of money in the account to enjoy the benefits. We'll dive deeper into this later. It's important to understand all the terms and conditions before opening a money market account to ensure it aligns with your financial goals. The bottom line is this: money market accounts offer a solid combination of earning potential and accessibility. They can be a great addition to your financial portfolio if you meet the requirements. Stay tuned to see how they stack up against high-yield savings accounts in other key areas. We'll explore the pros and cons of each to help you make an informed decision. Liquidity is a fancy word for how easily you can access your money. When it comes to high-yield savings accounts, liquidity is usually pretty good. You can typically withdraw your funds electronically or transfer them to another account without jumping through hoops. However, there's a federal regulation known as Regulation D that limits certain types of withdrawals from savings accounts to 6 per month. Don't worry though. This usually only applies to convenient transfers and withdrawals like those made through online banking or telephone banking. You can still make unlimited withdrawals in person at a branch or ATM. Keep in mind that exceeding the 6 transaction limit might result in fees or even the conversion of your account. It's always best to check with your specific bank to understand their policies. Money market accounts also offer relatively easy access to your funds, but there are a few nuances to keep in mind. While you might get those handy check writing privileges and a debit card, some money market accounts might have limitations on the number of checks you can write per month. And, just like with high-yield savings accounts, Regulation D comes into play, potentially limiting certain types of withdrawals to 6 per month. Again, it's all about reading the fine print and understanding the specific rules of your chosen institution. The key takeaway here is that both high-yield savings accounts and money market accounts offer decent liquidity. Just be aware of any potential restrictions to avoid any unpleasant surprises. Section 6, the minimum balance game, high yield versus money market. Now let's talk minimum balances. This is where high-yield savings accounts often shine. Many online banks offer these accounts with zero or very low minimum balance requirements. We're talking as low as $1 in some cases. That means you can start growing your money without needing a small fortune to get started. Money market accounts, on the other hand, tend to have higher minimum balance requirements. We're talking hundreds or even thousands of dollars. This can be a barrier to entry for some folks, especially those just starting their savings journey. So if you're working with a smaller sum of money, high-yield savings accounts might be the more accessible option. Section 7 Fees. Fees, go away, what to watch out for. Let's be real, nobody likes fees. They can be a real pain, especially when they seem to pop up out of nowhere and eat into your hard-earned savings. The good news is that both high-yield savings accounts and money market accounts are generally pretty light on fees compared to some other banking products. These accounts are designed to help you save more, not less. However, it's crucial to be aware of potential fees that might sneak up on you. Even with these generally low-fee accounts, there are still some charges you need to keep an eye out for. Some banks might charge monthly maintenance fees, especially if you don't meet certain requirements like maintaining a minimum balance. These fees can add up over time and reduce the benefits of having a high-yield account. Other fees to watch out for include excessive transaction fees. Remember Regulation D? Inactivity fees for not using your account enough, and paper statement fees because who uses paper anymore? These fees can be particularly frustrating because they often feel avoidable with a bit of planning. The best way to avoid unnecessary fees is to read the fine print and compare the fee structures of different institutions before you commit. Take the time to understand what each bank offers and what they charge for. Don't be afraid to ask questions and clarify anything that seems unclear. A little bit of effort up front can save you a lot of money and frustration in the long run. Remember, it's your money, and you have the right to know exactly where it's going. Section 8. High yield or money market. Which one wins? So, we've covered a lot of ground. You're now well versed in the world of high-yield savings accounts and money market accounts. But which one emerges as the ultimate winner? The truth is, there's no one-size-fits-all answer. The best choice for you depends on your individual financial goals and circumstances. Here's a quick side-by-side comparison to help you decide. Interest rates. High-yield savings accounts typically offer higher rates, while money market accounts are competitive, often slightly higher. Liquidity. Both offer good liquidity, but with potential limitations. Minimum balances. High-yield savings accounts typically have low or zero minimum balances, while money market accounts usually have higher requirements. Fees. Both generally have low fees, but it's important to watch out for specifics. Section 9. Your money, your goals, making the smart choice. In this section, we will explore the different types of savings accounts available to you and how to make the best decision based on your financial needs and goals. If you prioritize earning the absolute highest interest rates and don't need immediate access to all your funds, a high-yield savings account might be the way to go. These accounts typically offer significantly higher interest rates compared to traditional savings accounts, allowing your money to grow faster over time. However, it's important to note that these accounts may come with certain restrictions, such as limited withdrawals per month. If you value having check writing privileges and a debit card for easier access to your money, a money market account could be a better fit. Money market accounts often provide a good balance between earning interest and maintaining liquidity. They usually offer higher interest rates than regular savings accounts and come with the added convenience of check writing and debit card access. However, be aware that these accounts may also have transaction limits and minimum balance requirements. Just be mindful of potential minimum balance requirements. Many high-yield savings and money market accounts require you to maintain a certain balance to avoid fees or to earn the advertised interest rate. Falling below this balance could result in penalties or reduced interest earnings, so it's crucial to understand the terms and conditions of your account. Ultimately, the key is to choose an account that aligns with your financial goals and helps you make the most of your hard-earned cash. Remember, knowledge is power. By educating yourself about the different types of accounts and their features, you can make an informed decision that supports your financial well-being. Consider consulting with a financial advisor to get personalized advice based on your unique situation. By understanding the ins and outs of high-yield savings accounts and money market accounts, you're one step closer to achieving your financial dreams. Take the time to research and compare different options, and don't hesitate to ask questions if you're unsure about any aspect of these accounts. The more you know, the better equipped you'll be to make the smart choice for your financial future. Now go out there and make those savings work for you. With the right account, you can maximize your earnings and reach your financial goals faster. Stay informed, stay proactive, and take control of your financial destiny. Your future self will thank you for the smart choices you make today.